Hi guys, good evening. Just sharing the link. Give me 1 second. It's shared on Twitter as well as Telegram. All right. So, hi Devinder. Good evening. Hi Sven. Good evening. Hi Mitchell. Hi Rajshekar. Thank you, Mitchell. Thank you very much. Dashrikal, Kamal. Hi Srini. Hi Prakash. Hi Tarish. Naisa. Good evening, guys. So, as I mentioned right up front in the morning, that I'm not in a trading mood, and the only one trade which I did was SPX, and I mentioned uh, the levels right around 44.58 area. That yes, around this area I expect the market to bounce, and it did, and it came back right to 4495 area. Hi Charan, hi Gurpreet, hi Siddesh, hi Satish, hi Ferrari. I'm good, guys. So this was my take. It's right there at 44.58. And anybody who's doing intraday, uh, I'll just show you how I identified that area right there. This is the 15-minute candle which I use. This was 445, the first phase, and then zoom, 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 all the way to 448, where I exited, because then it kind of showed a little wick at the bottom, and that's about it. That's why I'm telling you, if you follow High Kenichi candle on a 15-minute, not 5-minute, not 10-minute, not 2-minute, not 1 minute, 15-minute, you are going to make money. Try test this on any ticker. If you follow a 15-minute High Kenichi candle, you will remain in the game no matter what. You will not lose. Do not react, just follow it. Anything changes, like the candle is making this, exit. When the candle was making short, remain in the game right there. You may not get all the points, but you will get sufficient points to make good money. Okay. Uh, Hi Vinash, hi Kunal, hi Tahir, hi Ramneet, hi Pankaj. I only did one trade. It was not a big trade. It was like from 3.8 to 8. So it's an all right. Anilesh, bye, good evening. So I will simply reiterate the fact that there is no need to get entangled into multiple logics, multiple theories. Just follow a simple mechanism which you will not find anywhere else. The magic of High Kenichi. Just follow this. I posted right around 44.65 area that yes, we could hit 44.95. 44.95 was the previous area. We hit that, and then we are struggling back again. Okay. I want to talk about the ES and NQ level first. I'll not be going through all the levels tonight because tomorrow we will find a direction. So anywhere, wherever the market goes, the levels will go. Right now, if you look at this ES chart, and these are High Kenichi candle. High Kenichi candle, one thing which you will know or note is, if you are not making newer lows, like if this tick was right here, then you can see that there's a continuation. But whenever we have a smaller tick, it means there is a possible change in the trend. Okay, that's one of the indications you can keep in mind when you're trading high Kenichi candles. Okay, and this is only possible if you have flat tops or flat bases. That yes, if you are making lower highs, time to exit. If you're making lower lows, time to exit. Right now, tomorrow, if we break below this number, 4462, which is not a big number, if we break below this number, the sell-off will be massive. Just mind that. 4462, if we lose this number, sell-off will be 4350 in straight line. I do not have a single line of support for this. Thanks, friend. And like my whole goal is not to make trading complicated, not to like do anything fancy. Just follow these candles, and high Kishini candles are so beautiful. You can clearly see them that yes, they're green, they're red, very beautiful. Okay. And if you want to change, you can also change by going into the settings, go into the appearance, choose high Kenichi. If you want to do fill up green, let's fill up green. So you look like they look all beautiful. Okay. So follow high Kenichi candle when you're in a position. If you're in a position, you will make really good money. Even if you have losses, try this thing, you will make money. All right. Now, in terms of levels, we are still under 12 EMA. We tested 34 EMA. Like because now we are not talking about the trend or the follow. We'll go to the normal candles. We are below the 12 EMA. I'll also make them green. These candle looks nice when they're full. This looks nice. So when these candles are right there, this was dodgy yesterday. We were not sure what is happening. Today, it tried to do a breakdown because it made a newer low. The high was not beaten. We made a lower low, lower high, which suggests that yes, the momentum was negative. But then we bounced from the bottom and then we climbed up. Couldn't cross 34 EMA. That was the resistance 44.99, but able to hold 44.87. We are just trying to hold that 44.87 by a very thin line. So if we lose this again, I think we will go back to this area, which is around 44.70. Now, I think at this stage, if we lose 34 EMA and we come to 44.70, I may try one long, expecting it will not break 4462. Kind of a breakdown and then bounce. Or if it breaks down below 4462 and then immediately bounce back above 4470, that is the time where you know it's a fake breakdown and we need to go long. Okay, so this, there are many news which are coming out of China right now from their central bank. My phone is getting notifications, a lot of them. All right, so 4458, if it sustains below here, like one more thing, let me just make it a little more with an example. I'll go into paint and show you something. And just like Gaurav will talk about that. 1 second. So when we talk about fake breakout or fake breakdowns, suppose you have this candle. Okay. This is, let's say, yesterday's candle. All right. Now this candle is saying, let's take 4499 at the top. This is 4495. This is 4487. I'm just giving you example, and this is, excuse me, 4462. Now, what are the possible ways to understand fake breakout and fake breakdown? So let's talk about fake breakout first. Out. Okay, now let's say if our candle in the morning goes above 44.99, let's say it makes 45.10, and immediately come back below 4495, like within 5 to 15 minutes, if it comes back, that's a fake breakout. The only thing we did was we made a new high. Fake breakout is only to clear the liquidity. When that thing happens, it's excellent area to go short. This is not buy the dip. This is an excellent area to short. Very simple technique. In case of fake breakdown, if we break below 4462, let's say we made 4455, within 5-10 minutes, we come back and we go above 4470. It's a fake breakdown, and then it's time to go long. This is all technical. There's no fundamental reason here. This is fake breakout and a fake breakdown in terms of ES levels for tomorrow. If you see we make 45.10 and then we break down and we do not hold 44.95, it means we are breaking down. So we need to find shorts. You can short a future, you can buy a put. Same thing. If we are going down 44.55 and then immediately within 5 to 15 minutes, we take over 4470, it's time to go long. If 4470 is broken, that's your confirmation. 4495 is broken, that's your confirmation on the downside. If 4470 is acting as a resistance, at that time, you need to just wait, let it sink below 4455 and then go short. All right. This is purely technical based fake breakout, fake breakdown. The only thing you need to watch is a new high or a new low, which does not sustain for more than 10-15 minutes. If that happens, it's better to take a trade of their opposite direction. 4487 is just an example, but we made the new low as 4462. So we need to break that 4462. This is the candle. This was like open and close. This was the low and this was the high. Above 4499, which is 445.10, and this is way too far, and 4470 is the middle level, so 4470. All right, any questions on this fake breakout or fake down? Because then I'm going to talk about FOMC. All right, I'll think there's a lag. So FMC, last time we talked about that FMC for a fake breakdown, if you went long, your stop loss would be the low of the fake breakdown. I would say first candle, I will take the low of the fake breakdown and then I will do the Heikin Nishi candle and follow it. Till the moment Heikin Nishi candle is holding a flat base, I'll just keep on holding my long position. So FMC, as of now, rate is 5.5. only 2% analysts are expecting a hike of 25 basis points. And the BP, 95% are saying no hike. Now, again, my rationale towards this is the crude. Like, first thing is CPI prints were higher. Core CPI is not so like excluding food and energy was kind of off. Like the CPI was higher, the PPI was higher, but the core within them were flat to positive. Like core PPI was down, core CPI was also flat to negative, like down. But CPI was higher, PPI was higher, and this is excluding. Now, the major components of CPI are rentals, which, if you compare them year on year, the prices have not come down. They're only rising and rising and rising. So, for a relative comparison, this is a big contributor. It may be a factor that, yes, this time the PPI is low, but next time we may have the core PPI as high. So, if I'm Fed, I'm looking at very like much few things. Right now, what is the impact of current interest rate hike? Not much. Companies are still guiding higher. Companies are providing more and more jobs. So there is no unemployment. There's no recession. The consumer spending is still high. The economy is solid. The GDP was fine. All these factors are suggesting the only thing which was lagging was the PMI, like the manufacturing index. That was the only thing which kind of showed that yes, there is some impact, but it's going to take more to showcase that yes, the inflation is down. Now, crude, which is one of the biggest factors, has risen last time from $75 all the way to 92. Yields are screaming that we are in recession. We need to be in recession because the amount of interest which is getting out of these yields is like enormous. So all these factors, like if I'm a FOMC guy, all these factors are making me nervous. I have only two ways to address this. Either I will do a balance sheet reduction at aggressive price, or I increase. Look at ECB. They did that and they said, no, we are not going to do anything more. We want to just see the impact. Canada, inflation spiked. What they do? They have to increase the rate next time. They've already done 10 times. Even then, the inflation is not getting in control. They would require another one. Now, are we going to sit out this time? 95% of the people are saying yes. I'm still saying, because last time they clearly mentioned they expect couple of hikes. This will be couple of hikes. Now, this statement, if we have 25-point basis hike, market may initially take this as negative, but then it may take it as positive that yes, that's the end of hikes. Now, the next thing can only happen is the reduction in the hikes. We may have a period where we have no hikes whatsoever, but then there's a possible reduction which might happen. So market may cheer it. But if he says inflation is coming back and we will have more meaningful hikes coming into the future, and they will not be like data dependent, is the piece where he will say uh, current hikes are done. But if he doesn't say the data dependent piece, market will not like it, because then it gives ambiguity to the market thought process that yes, 25 basis points are there. Now, how more we need? How much more hikes? For me, I still believe we have at least 2 to 3 more hikes. Like 6.2% it used to be normal rate until 2008. From 2008, we have a regime of 0% interest rate, but 6.2 to 8% was nominal, was normal in America in 90s and early 2000s. It was a normal rate of interest. People who are here, who were born here, they know that yes, their interest rate used to be 6.25 to 8%. So terminal rate outlook, that's what I'm saying, Chiran, that if it gives a clarity that yes, they be data dependent, then the terminal outlook will be around 5.75, 5.5. But if they think there's much more, terminal report data will be little higher towards the 6. Uh, Texas US debt has increased by 1 trillion within this quarter. Yes, they have. See, they cannot print and increase the balance sheet. Right now, the interest on all these is really, really high. And next time with higher yields, it may actually do some damage to the dollar. Because you cannot keep on printing balance like dollar and thinking, oh, it's gonna just add. It may do damage to the dollar, and damage to dollar will not be liked by the US market. So I think government has to stop spending and somehow they need to increase their revenue so that they can complete this deficit somehow. So they need to do something meaningful. Otherwise, what will happen is we are right now just printing the dollars against the debt, but that had to be paid someday somehow. And 31% of the government debt is going to mature next year. So the amount of interest which is supposed to be uh, like refinance next year will be really high, because right now the interest or the yields were really low, but into the next year the yields are really high. They are up to like 4%. So there's a meaningful gap of around 3.5%, which is substantial. So we need to be very careful, if you are the US government, if you are the Fed, that yes, the more you are going to print, that may actually hit and damage the dollar, nothing else. All right. So from my point of view, I expect a hike. I think we should get some clarity about more hikes, because, as I said, the inflation is coming back and it's going to haunt FOMC. Balance sheet reduction, if they suggest that yes, they'll increase the balance sheet reduction, market may not be like, I would say, angry with it, but this will offset any upside in the market. Balance sheet reduction, if they increase it to $200 billion, so it like let's talk about balance sheet reduction. Balance sheet reduction. So if right now the idea was about $120 billion per month, if they increase it to 200 billion per month, then it caps the upside onto the market. Meaning then you need to have fresh investments, FI, plus like these investments from all the new people who are from their salaries, or the addition to the current 401ks, pension funds. Like this is the investment. Like if there's a new person who wants to invest, or there's a new money in the market which needs to be invested, this needs to be net at $200 billion per month to offset, because Fed is going to offload $200 billion from their balance sheet. It means all the companies who have taken, or all the corporates, or like any form of matured securities, they have taken, they need to sell those assets to return the cash to Fed. And that's how Fed will reduce their balance sheet. So this kind of offloading needs to be offset by at least this amount of dollar. So if we have $200 billion per month coming every month, then we are at a flat level. Like if we are at 4,500, we will remain at 4,500. But if we are not able to beat this offsetting, increased offset, then we'll start to go down. Because the amount of selling pressure will be much higher as compared to the amount of buying pressure. So it's a cycle which is a little confusing to everybody, but it needs to be addressed. Either they will hike or either they will do a balance sheet reduction. My take is they will do a balance sheet reduction a little stronger than what they anticipated until now. So that may be one option if they're not doing a hike. So if they say no hike, let's write down the scenarios. Okay, the first scenario, 25 basis points, and in his commentary he says data dependent. Let me write it properly. Let me use a text. Come on. Scenario first. 25 basis points hike plus data dependent, market will surge. Second scenario, possible targets, if I have to write, I would say 45.81 possible. Okay. No hike, that's at 25 basis points. 25 basis points hike plus idea of more hikes with higher terminal rate, market will not like it. Break of 44.58 can lead to 43.25. Now this one, no hike. Plus data dependent. This is inline. Market may remain flat. Or like remain in the range. In this case, with higher hikes, I will say no hike. We'll do the second option. Okay, now this is my take. If we have a 25 basis point hike, it means all the hikes are done. Market have a clarity and the data dependence. Market can surge. I will not use word can surge above 45.81. No hikes. Market will not like it. Will not like it. Can lead to 43.25. No hike. Market shall remain in range. I don't want to use will because it gives like a little arrogant touch, but this is what I feel we can have in terms of direction. So in terms of levels, I will also write down for ESF first case is fake, like 44. I'll write this ES level later on. Any questions on this, guys? Let me do one more thing. Let me bring you all on YouTube. So on Zoom call so that we can all talk. Because this will become better if we can talk to each other. So, wow, we have 111 people. That's really good. These days, people are actually joining my calls. I'm really liking that. It gives you kind of motivation that, yes, people are interested to learn. I just discussed that inflation is higher. I've shared the link, guys. If anybody wants to join, you are more than welcome to join. And if we go back here and Rajesh, I just explained that data dependent will give them clarity. And market likes the clarity. If market likes the clarity, they will go high. I have one guy, Ankit, already joined. Mitchell, try again. The passcode is correct. I have Casey, I have Ankit. They have joined. Try again. So guys, anybody who wants to jump on, please jump. We'll talk. And it will give us a clear picture. And also, we'll talk about the flow. The data in the flow, which we have to account for in case we have points. So we'll talk about the flow of SPX. And yesterday I was looking at SPY puts. So let's also open that and see. Yes, Mitchell, you can speak. You can unmute yourself.
Okay, hey Neville, thanks. I was able to get on. So I kind of like on what you're saying about like potentially direction on the market if there's data dependent. So my question to you is will that still affect like commodities such as like crude oil prices? And also, do you foresee like if we do turn around that will tech lead it, or would it be more of like the Dow? Because I know the Dow's been down a lot lately.
I think it will be IWM and Dow. Tech
Okay.
I would say tech will be there because tech has always been the safest bet in the market when market is surging. So tech will be there, but this time you will have more participation, like broad-based participation.
Okay. And then do you foresee this trend may continue? Because I know earnings will start next month. So I'll be kind of curious, like, how does this affect like earnings and banks? If they potentially do with the data dependency be depending on what they do the last quarter of the year.
That's very subjective at this time. So I would wait until like this thing is clear. It's like very difficult to understand the impact of all this because we have a very big event coming from 1st of October where we have the student loans coming back into the picture. The credit card debt is really high. The household savings are at almost the verge of like this, not for everyone, but for the people who are low income people. They're almost on the verge of finishing, right? So it may have some impact. So I would wait for first week, second week of October to have that clarity, the impact on banks and everything. So that's my take. So
Thanks, man.
yesterday we talked about 1117 puts, which were of 421. The volume was 16,000. I'm just checking this from last night. 421, and the puts open interest was closed. So actually those puts were closed. November puts were closed from yesterday, if any one of you remember. And then we had the December puts of 422, which had an open interest of 37. Those puts were added 11,000. So guys, if anyone has any questions, I just want to check this on SPY, because SPY also has some really big close. So it was December 15, 2023. And the puts were of 422 strike. So if you look at 419 put, this is like 800,000. But with respect to SPY, it's nothing. Because now we have, this is 410, 460, 450. So this is a broken butterfly between 410 and 450. So this is a clear broken butterfly. Somebody is actually really. So what he's doing is he has $45 cost against 25, where the cost right now. So he thinks it's going to push, but not enough. So you can see 1,000 lots, and 2,000 lots. So he's expecting, like, as I said, 45.81, approximately that area, 44.60. I just want to see that SPY put of 422. So let me just check an expiry. 12/15/23. November, December, 12/15. 12/15. Apply. Why it did not come? Expiration 422 puts.
Although I think it's the start date. The start date is the same as the end date.
Yes, because I'm looking at the same expiry. That's the only reason. I'm just looking at strike 422. 422 puts. So yesterday these puts were added, and right today these puts were, like, there was a addition of 11,000 puts yesterday. Okay, and if you look right here into this, yesterday we had 11,000, and you can clearly see 10,000 of them were actually added. Okay, so the open interest got higher, but today we also have 11,980. Let me make a note of this again, because if these puts are closed, it means somebody is really bullish now. Open interest is now 13,349, 11,978. And if we look at the details of these contracts, all of them are being sold. So somebody is actually exiting all these contracts. And 6,422. Yes. I'll go back and look at 1025. See, option analysis does take a little of time. So you need to be patient with me, because right there, 1039 we had. So somebody exited these puts at 468. Yesterday they had it at 450. So it's only 100,000 with 214. Just keep an eye here. 1, Then. Let me just extract this into Excel. It's easier for me. So it was, now if I go back at 422, specifically 1025. So I'll go at 1025. 1025, this was the contract. It was a multi-leg contract. That's what it shows. No, it's a normal contract. The next one is multi-leg, 1255. 1255. I just want to see what's the other leg there. 1255. So these are the 4 lots. Or 5 lots. Let's see what they are doing. So 422 was selling, 419 was getting added. So if, again, I'll make sure it's if we have 422 puts removed into the open interest, it means these were closed, and instead 419 came into the picture, because these are yellows. So I'll just keep an eye on that 419 tomorrow, and I'll show it to you all. Like even 419 puts are right there. So this is 3 million, 1 million. So these are getting accumulated. Even in the after hours, you can see this is getting accumulated. So I'm going to write, it should be around like 10,000, 11,000 volume. Yep, 12,000 volume. So 419 puts, 1215. Open interest is 1746. Thanks, Sven. And I'm not a guru. I just love doing this, so I'm not a guru. Don't call me that. So tomorrow I will see if the open interest in 422 calls has reduced, and in 419 if it is increased, it means that yes, those positions were rolled over from yesterday. All right. So this shows negative setup. Let's look at anything on. Let's look at triple Q data. So triple Q data 4410. That's a block. I'll ignore the block for now. Usually they are hedges. I want to see a multi-leg, because if we have multiple legs trading the same strikes, it gives you confidence. For that, I need the same timestamp. These are weird trades. 390 calls are getting sold. 365 puts are also getting sold. 413, that's a really solid. Look at this. This is one trade. Like 1,000 contracts were sold and 2,000 contracts were added to compensate the price. So the seller is selling 390 calls. And then this is 1105. There is no leg I can find for this. This is, I believe this should be the same leg. 400 and 410. This is a positive leg, about 400 and 410. Right now we are 370. This is positive. 360 put is sold. Not much on multi-leg. I'll remove the annotations. I guess if like you can ask questions or discuss any point which you have. I'm just trying to see the data.
Hey, Neville, after you get done with that, can you pull up crude oil? Crude oil is pulling back pretty hard in the after hours. It's already almost down $1.
It doesn't matter. It's
Okay.
up almost $25.
Yeah.
Even if I told you this will come and test this before it can run again. So maybe tomorrow it will test the 12 EMA and take a base there and then run again.
Okay.
So nothing like if you compare from 1 month back, in month of August, it was around 76. Right there, 76, 77. From 76, 77, it's almost up to 90. That's about 20%. 20% is a good hike into the price. So I'll ignore it. Small pull off is always fine.
All right, cool.
Guys, anyone else? We have like 10 people on the Zoom call. Anybody wants to share their viewpoint?
That's your question.
Yes, go ahead.
Hey, I think yesterday you were talking about BA where had like 12 sessions in a row on the downside or something like that.
Yes, and it did manage to make a dodgy today.
Yeah. Any change in your view there?
I think we might see some push higher because it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days of high Kenichi. And if we turn it into parental, this is the hammer at the bottom.
Yeah. Why
So
do you use the Hanishi candles over normal candles? I'm just wondering.
if I'm in a position and I want to see when should I book that position, I use high Kenichi candle. But to make levels, to use candle patterns, I use normal candles. So once
okay.
I'm into a position, I just turn into high Kenichi so that I know whether I should remain. Because high Kenichi candles are based on the formula of OLHC divided by 4.
That makes sense.
So if it's like average of all the prices, and average is always higher and higher and higher. If average is higher, it gives you a direction that yes, you're doing fine, just hold on to your position. If you are wrong, this will make a dodgy.
Great.
That's why I prefer high Kenichi because they are based on a mathematical formula. They are trustworthy.
Yeah. Seen that before.
So
Right
Naval,
now,
one question on the shop. So do you think shop is going to make any difference? Shopify.
yeah, we are not talking about stock specific, but
Okay.
Shopify is the hammer at this time. Again, all these hammers, we need to see if they have like volume backup or not. The volume was higher here. So if market goes higher, it may try to attempt 60, 61.
Okay.
And at that point, we need to see what's happening. Well, this is not a very substantially high volume, but a little volume. And again, you can see dodgy right at the top.
Mhm.
Dodgy there, end of story. Whenever you see this sign, change of trend. Right here, change of trend. Dodgy, dodgy, boom up. So do not ignore this sign. Anyone else wants to talk or wants to share their points on FOMC tomorrow?
How about Meta?
Here again, I'm not talking about the stocks. We are talking about FOMC.
Oh, okay.
I think never they need to raise rates. I just think inflation is still getting. I don't think inflation is still in order We still need to raise rates. I know a lot of people are just going to be upset, but we got to get this inflation under control. I'm still concerned. I know I've been following you for a while now. I'm still concerned about the real estate bubble that still hasn't even started yet, which I think is going to start next year in 2024. I still think companies are going to be laying off more people, because I just think going into next year, it's just the spending and the rates are just going to be, it's not going to be enough to overcome everything. So I still think we do need to do some, okay, maybe they might pause it for a quarter, right? But I still think we do need to go up. I think we probably need to go up another 2 points by summer of next year. That's just my personal opinion. Or by fall, a year from now, I would say 1.5 to 2 points.
No, I'll not go to 2 points. That will be like massive 7.5%. I'll say we still have three hikes left.
You're talking about for this year?
Not for this year. 2 in this year, maybe 2 in next year. At
No,
least.
Yeah, but with this type of hike of 1% or 2%, would the mortgage industry not crash? Because it's already high.
It should have. It did not. It should have.
like
And that's
mortgage,
what is the pain point. That as of now, the impact has not been felt.
I mean, mortgage industry is in absolute shambles right now. I mean, like housing applications all-time low. I think like 10+ year low. Real estate's already starting to crack, especially in office. I mean, residential not so much yet, but
See, commercial real estate is on the verge of a breakdown, a very massive breakdown.
oh, I mean, if you look at like if you look at commercial office, it's in complete shambles, right? But I mean, real estate, like different segments of different pockets of strength, right?
Yes.
So like residential is doing okay, but that's only because homeowners haven't had a rate reset yet. But like once that comes up, they're totally screwed.
Once they start to feel that the value of the property which they are paying rent for, I'll give you a very simple example. People not like what example I'm going to take. People who bought Tesla in the January of this year, like Tesla Model X at 120,000. Now they're getting the same Tesla X for 75,000-80,000, right? Imagine a person who is taking a loan and paying the EMI on a car which is current value 50,000 less than what it was a year back. Exactly same thing will happen with the housing bubble. It's just a matter of time. And once that starts to break down and we hit recession, I think there we may see the bottom in the market. Not as of now. We need to go down a little bit, at least 10-15% from here.
So will it be a repeat of 2008, 2009?
No, 2008 was a different. There was a different rationale behind it.
Correct, the prime rate.
Yes,
There's-
people had like loans over loans, mortgage over mortgages. Here,
There's
go
Yeah,
ahead.
sorry, go. No, I was just saying there's like the leverage in 2008 was like 10 times what it was now, right? Like you can like just the CDO, CLO products, like there's way more leverage in the system. Like it's like from a total exposure percentage, like it's not even close in terms of the amount of leverage you can get from investment banking. There's prop trading, like a lot of leverage players out there, including like Lehman and Bear, right? So AIG, Lehman Bear, like Countrywide, IndyMac, and the list goes on and on. But like the amount of leverage inherently in the system was much greater than where we are now. And that's part of why Glass-Steagall was introduced and separation of investment banks and prop trading desks. So I don't think it's going to be a deep recession if we do hit one this time around.
But this time it's not about that. It's about the debt. People at the lower income are into debt, and they're just taking like they got used to a lot of free money since the COVID was there. Like many small business owners, they got like 10,000. A little big business owners, they got about $1 million.
Yeah, I mean, but that was from the PPT, right? Like
Yes,
PPT, just
and
like
they
government
used
just gave them. Yeah.
and they used to use that money, right?
Yeah.
Now that money is still with them. It has not completely vanished, but it's for the lower income people, it is almost there. And that's why you see the debt on the credit cards is getting higher and higher, because people are trying to leverage that kind of lifestyle by taking, like putting it on their credit cards. it's going to fall. It's just a matter of time. If there's unemployment rise and people will start to lose their jobs, they'll not be able to pay the money back on those credit cards. And if that happens, it was going to have a massive impact. So it's a cycle which will take its own time to happen, but we should not rule out anything which is possibly mathematically.
On housing is they say the inventory is very low and the new houses still contracts are not that high. And plus the
Because at
interest
this
rate,
time, nobody's
people in
buying.
house have a very low interest, like some have less than 3%. So they have more leverage to hold on to their house.
No, man. Like, suppose you have a house and you lose your job. You do not have any means to pay the EMI, or how would you do? How would you manage that?
No, but they, like those people in house, like more than 5 years, they have a lot of equity in house at the current rate. And also they
Man,
have
then
mortgage
need
at
to
very low
understand.
rate, very low rate.
You need to understand, when you're trying to sell, you need to have buyers in the market. There are no buyers at this time. The
Well,
mortgage applications are 23 years low. Nobody's buying.
I mean, yeah,
Buyers are
that's
there. In my neighborhood, the house comes on sale, it goes in within a week still.
It's only happening in communities where you see Indians. That's it. It's
affordability.
not happening across America. It's not happening. And
Yeah,
the investment properties were bought by big companies like Zillow, Redfin. They were buying many of the properties, and they were like, now if they try to sell, because they want to cover all the like losses from the commercial real estate, and that's why they keep on pushing and reducing the inventory as and when they're coming onto the market. But they also are stretched to a limit. They cannot go on and on and on. That's why I'm saying it's like a piece of dominoes. If you flick one, everything will fall in place one by one by one.
Oh, okay.
See, either I am dumb or either Jerome Powell is dumb. He wants to crash this housing bubble. So I'm just following him. So if you do not trust him, if you do not trust the data, you just think, oh, in my community, if somebody is selling a house, it's getting sold, it's fine. Same thing where people were doing, oh, let's book Tesla. What happened with Tesla? 50,000 in just 6 months. If you have cash, keep that handy. You will get really good opportunities.
Yeah, I don't think Jerome Powell is trying to actively crash the housing market. He's just really trying to rein in inflation, which has just been running rampant, right?
Inflation is not going to come unless we have a big recession. We need to cut down the demand.
Yeah, and he's been raising rates to do that, right? At least the front end of the curve, right? So, like, that's his answer.
He has done that, and as of now, no impact. Consumer spending is still high because they still have that kind of money.
Yeah, because homeowners don't like if the Fed raises rates, like your home, like your PMI doesn't increase overnight. You know, it increases when you go to refinance, right? So like if you lock in at 3%, like 12 months ago, like you're not going to feel it until you.
You're not getting my point. I'm not challenging that. I'm saying, if you lose your job, if you have loss in your business, how you're going to cover that EMI?
Yeah, I understand that, but like
the only caveat with this this scenario, excuse me, is most people that have homes right now have equity. So if they lose their job, they can easily sell their house before it gets foreclosed. Additionally, we have the millennial coming up to home buying age, and they are currently priced out of the market. So you have a bunch of pent-up demand that is waiting for this interest rate to come down. Add that to that builders. I'm a broker, so we keep up with the data in real estate. Add that with the fact that home builders are not building like they're supposed to. So every year that they are not building is excavating the supply problem. So whenever, even if interest rate, usually we used to have either higher interest rates and lower prices, or lower interest rate and higher prices. Now we have both. because of the problem. It's a really, really big problem for the Fed to crack. So commercial real estate is a different issue because of work from home. We're going to see a decline in that. But I think residential, especially in the cities with positive migration like Texas, Georgia, Florida, I think residential have way more higher to go before we see a downfall, to be honest.
Okay, let's wait and watch.
Yeah, I was gonna say affordability, like, I mean, even though if you lose your job and you have to sell your home, like you still have to sell to someone, right? And affordability rates are, 20 years low. So like who's gonna be
Exactly.
buying? Right?
Who's
Like
going to be buying
there's
those
no
houses?
liquidity. There's no liquidity in the market, right? And your
Yep.
point on home builders, like they're not building because no one wants a new home, right? No one can
Exactly.
afford it. So it's not necessarily like, oh, pent up demand. It's just like they don't have any money, like the consumer doesn't have money. So you're not gonna, as a builder, you're not gonna go out and put 200,000-300,000 in raw materials when no one's buying it. That's just stupid, right? So why would you do that?
So the current problem is, right, see, they are increasing the rates on one end, but still the credit card companies and the personal loan companies are still extending money. So the one way to do that is if they increase the statutory ratio for the holding the banks have to have with Fed. So if they have to suck money from the banks, until they suck money from the banks, so this circle is going to go on because they have money and they have to lend it to someone because they need to pay the depositors. So they go and lend it to credit cards. So one thing, as Nobel says, is that unless there is going to be an unemployment, this cycle is going to go on because they're going to keep extending money in all these loans. And they're still going to get, the banks are happy to get the minimum money because that's when they get the interest. They make more money out of it.
Yeah, so again, like let's do one thing. Let's bring the focus back to FOMC. Let's keep the housing market aside. That's a separate story, separate reel altogether. From FOMC point of view, any thoughts, guys?
Hey, Neville, I just had a quick question. Like, if you look at TLT, do you think where it's trading at right now, that's kind of a warning being put out there?
It's
Because
right there at 91-ish area. And yes, if it breaks down, we are going up.
Okay. And then also Dixie as well, DXY.
DXY is breaking out.
You see it keep going up, or you think this is trying to top it out?
See, Dixie may not have that much impact. Right now it's making dodges at this point.
Yeah.
So if it loses 105-ish, or I would say 104.20, things will change from there. Because when Dixie is going up, market is trying to kind of hold. And right now, there's not direct relationship between the market momentum and Dixie. It usually happens once in a while, like in situations where Dixie is having an impact on export and the prices. At that moment, yes, but not as of now. Stronger dollar will push the market higher. Weaker dollar will push the market down.
Yeah, because when I look at Dixie and TNX, like TNX is trading at like it's at 4.37 interest, right? So are you expecting TNX to also go up?
I think they are already breaking out. See, it's not about what I believe. It's like right now, if you see, let's follow the same thing. Heikin Nishi. It's telling us the averages are higher.
Yeah.
So let's follow that.
Okay. Thank you.
Because when we start to put in our logic against the data, what we are seeing, then we get confused. Right now, it's telling it's higher, high, higher, high, higher, low, flat, flat, flat. Let it go. Unless something changes, We'll get to know. For
Okay,
now, it's
thank-
clearly showing us a sign. And if you draw an Elliott wave on this, you will, let me see if I have monthly for 5 years. Let me add more time frame here for max available. So as of now, it's, if you see, this is like a cup and handle.
Okay,
If it breaks out, we should actually can go like up to 6, which was the .com bubble.
yeah, it's not a good sign.
It's not a good sign. That's what I'm saying.
Yeah,
It's
yeah,
telling you it's flat, 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 and can possibly go higher.
okay,
And it gave like right here, it tested, gave you a flat base at 35. 35 to almost 4 months, it's 43. That's why like Heikenich is very crystal clear and giving you a trend.
okay. Thank you, Mike.
No problems.
Hey Nawal, this is Raghu. Like in last few weeks, we have not seen any Fed speakers coming on speaking. So what does that mean? Like,
They had I think they had some period in which they're not allowed to speak.
oh, okay, okay. So okay, thank you.
All right, guys. Again, I will say, do not trade in the morning. Wait for the right opportunity. I have one trade in mind. Let me just share with you all and tell me if it makes sense to you or not. I'm looking at an XPX trade, and this is a trade I'm thinking to put like 4 grand on it. I'm looking at $44.65 calls at around 4 to 450 price in the morning. Okay. And I'm also looking at puts of 44.15. So I'm taking like both sides calls and put, and I want to see if we break out or break down. If we break down, will be, again, I want to buy them as cheap as I can. So I'll wait until like 225, 230 to buy them, because main move will happen after the press conference. So it's the range 45.15 to 45.65. If we break down, we'll clearly clear both the ends. So I'm planning to place an OCO order for 45.15. At that time, maybe it's like $3. I'll buy 3, try to sell this at 15. Same thing, 3 or 15. So if one of them works out, I'll be more than happy to make like from $6 to $15. What do you think?
But I might not be that expert, but in case if it goes like a flat scenario, which you said, it won't kill both the sides.
That's why I want to wait, because it will, like the high piece will be clear at 2 p.m. Right?
Yeah.
Once that is done, we'll have clarity where the market wants to go. And initial 10 minutes market will be very volatile, and then from 215 onwards to 220, it will give you an opportunity to make your positions.
Agreed. By when it is 220, once we get the clarity why we need both the sides, we can go only for single side.
Because
Right?
then the main move will happen from his press conference.
Okay.
It can go both sides. And if you are not sure, one of your sides will be vanished. Yes.
Yeah,
You
and if
should
you're on the
probably be
inside, then you lose it out.
Yes, that's the risk always.
But on 0DT, I found SPX lose value very easily on both sides.
Again, like you need to be very quick on trading 0DT.
Yeah, you should be selling implied vol into this would be my, you should be selling further out strikes to cover, right? Like selling like deep out of the money.
I understand that, but I don't like selling options.
Yeah.
You
I mean,
like
you use
I
spreads
prefer
and I
to
guess.
choose options which are about to move, and that's why I like take 1 or 2 lots on SPX. I do not go heavy like 10, 20, 30 lots. No, I don't do that. I
Yeah,
take
but you
1 or
can
2 lots and I try to make them 200, 300, 500%.
Yeah, but you can sell bear spreads and bull spreads against like super deep out of the money, right? So if you sell like 4,400 puts and offset buy of like 43.90, right? You can pick up the spread there and you can pick up the IV crush, right? So
Yeah, that's fine.
that's
But what if I'm called in a meeting room at that time and then market drops?
oh yeah, that's
And that's always happened. Whenever I go
Yeah.
into a meeting room, something happens and I lose. So
Yeah.
why to take unnecessary risk?
But I think it's a
By
good play because
by just as a joke, better block your calendar till 3 o'clock.
I usually do that, but sometimes like I'm pulled into something and I actually go into my office, so I cannot even say I'm busy. I have to go into that conference room, maybe other floor altogether, and then I lose track of everything.
That's
for-
what you get paid for. Right? You
Yes,
can't,
that's my priority. That's my job.
yeah. Unless we do this as full time.
And I don't do this as a full time. It's just like I love doing this.
I mean, for what it's worth, I think you're gonna be wrong tomorrow, and I think the Fed is on hold, but
It's
no,
fine. It doesn't matter
that's
to
what
me
makes a
because
market, right?
I'll be taking position only after 220. So if rates hike,
So
doesn't hike, doesn't matter to me.
that makes sense.
I
But
think it's a good play because I mean some of us we play SPX and SPY a lot. So I think what you're planning on doing should be good as long as you're scalping and you're in and out quickly. That's kind of what I'm planning on doing as well. So like I think you should be fine.
okay, but again, I'm not trying to enter right away. I will be waiting until 220. Like today, I waited until 2. Then I added SPX calls, and then those calls like from 3.8 went to 17, 18.
Yeah, that's a super call by, but yeah, XPS I burned my hands like anything, so I'm getting scared whenever I try to
So
enter an
you
XPS.
only burn your hands if you put more dollars into more lots. If you buy 1 lot and buy 1 lot with logic, that can make you 1,000.
Yeah, that's like when I go for 1 lot, I'm getting money and I'm closing soon. But when I enter more, I'm losing all.
Why you want to enter more? Because you are greedy.
Like to cover the cost and leave the runners.
No, just have one, let it run.
Okay.
Let it run. There's no point like.
Yeah, so I've worked out a strategy which is called the snake and ladder strategy. So for this, when you have to enter, so I enter only 1 per time, and then as the candle goes up every 5 minutes, so I add one each. So this way you're not entering the 10 lots at one go. So
That's a good strategy, but I will not recommend that for zero DT. No, never. It's a ladder strategy. It's a very old strategy, but I will not recommend this on a zero DT experience. Never. It should be good on stocks, not on options.
So do you mostly post to Telegram or to Twitter more?
99% I'm on Telegram.
Oh, okay.
Like this is my Telegram. Where is my Telegram? Are you in my Telegram?
Yeah, I think I just joined a couple of days ago, but I've been doing this for a
Like
while.
99% of the time I'm here on Telegram.
Yeah.
I post
Yeah,
here
so.
all this information.
Wait, so the public channel no one can respond to, but the group people can
No, you
respond to?
can
Is that
channel here.
Yeah.
You can respond here to all the
Okay.
comments. You can like leave the comment right there.
Oh, I see. Cool.
It's like right here. You can see the comments. And in the morning, I posted this right here at 1 o'clock. Market came to 4458, and now we should see up move to 4495.
Yeah, I missed that one. Same thing. I was at work all day.
But just one quick question. I was not able to find that 4458. I think we came till 4462 or 61, right?
What did I say? Area.
Area. Yeah.
Okay.
I didn't point the exact number.
Yeah, just want to make sure like I'm looking at the same ticker which you're looking, because I found something
Market for me is
ESZ 23.
Yeah.
there's only one ES.
Oh,
If you go into ES, right, put ES monthly tickers. If you put ES, it's always going to be the current futures, which is December.
okay. Because I see someone posted their chart showing like, is this the ticker? And you said yes. It has a different name than what I see.
That was, I think, TradingView. I don't care about TradingView because I don't use it. But
Okay.
the numbers are same. This is December 2023. If you put Z23, that's also December 2023.
Okay.
They have, yeah, they basically have ES1,
Yeah,
2,
that's
3,
what
for
I
example.
was able to see in my toss ESZ23.
But why you want to use ES? It's directly ES. It always remain ES.
No,
I'm not able to
well,
see
It
that.
that's,
will automatically switch to the next future 1 week
that's,
before it expires.
yeah, that's not technically true, but that's fine.
No,
Yeah, I mean,
it switches automatically.
No,
Like
no,
if you-
if you have ESZ23 in this, it's always like, it will just always track the December contract, right? But like your broker has to basically like, so when the contract rolls in the front month, like your broker will do it, right, for you. So
No, it's like there's some configuration. Like if you put some square brackets against the month name, like this, it will automatically change your futures 1 week before it expires. Try this on any future, crude, natural gas, gold. It does automatically. I do not have to change anything ever again.
no, yeah, that's what I'm saying. Like if you have like just ES normal in, it will automatically roll for you. But if you type in Z23, for example, like that will always just track the December contract. So it will track the
Correct.
contract even though it's done, right? So like you should always be looking at the front month contract anyways, regardless of what's going on.
Yes, that's
Yeah.
why I use ES.
Yeah.
But in my watch list, if you go here, I have all them in the square brackets. So all of them automatically gets updated. I do not have to add them again and again into my watch list. If you keep them like just as ES, they will only pick up the current month and then they will be showing negative days to expiry.
yeah,
But
maybe
if
it will show only in desktop version, but because when I search in toss mobile, all I with the /ES, all I see is ESZ23.
put them in square brackets, you will do not have to worry about it. There's some coding conventions if you use, then things get much cleaner. Yes. All right, so it's 11:30. So yeah, I think we had a good conversation. So thank you for your time, guys. Ash Telegram link is on Twitter. You can go and look into my profile and highlights. You will find the link. But tomorrow, my best thing, let's look at tomorrow's, let's say, Haikinishi. Boeing is 12. If it doesn't turn around tomorrow, I think it's a mess. There's only one thing which is positive: Apple and gold. Otherwise, all of them are in non-Haikinishi states. 12 and 34 is down, 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 down. Nothing is positive. I should add also 12 and 34 for the entire day. I need to add that. All right, guys. Thank you very much for joining in. We'll see you tomorrow night. Bye-bye. Take care.
Good night.
Good night, Naval.